Good evening, ladies and gentlemen. We have a terrific attendance tonight for the free webinar update. I believe I'm going to make it very constructive and to the point. That's going to help you all understand the dynamics of what's going on so you can make a lot more money. Today is June 13th, 2017, approximately 7:45 p.m. Eastern Standard Time. Full disclosure, this is purely for financial education and not for any solicitation or advice. Session will be recorded and uploaded for viewing by all members and your friends or whoever wants to learn something about the markets and learn the skills. And it will be accessible on the YouTube channel for everyone. Okay, so first and foremost, I tweeted out earlier on an article that just hit the wires approximately, hit the wires at 5:38 p.m., roughly 2 hours ago. This is exactly what I've been preaching and I've been pushing and I'm trying to teach people and get them to really change their mindset. This article, I didn't write it, but look at the words on it. It's a death of the human investor. That's exactly what you guys hear from me all day long. Tactical, not emotional investing. I'm not kidding around. Okay? And you know I'm not kidding around when it comes to my business. This is my living. And I have a very solid living doing it. And I try to help others to do that, do it the right way. Because there's a right and wrong way of trading. Investing is easier. You put some money and you sit on it and it goes higher, it goes lower, you sit on it. That's a different story. You want to make the big bucks, you got to also trade. Invest long-term investments plus short and medium-term trading generates a significant passive income away from your real jobs, because most of you are fully employed and have great careers. But making a serious amount of money on the side, which in many cases can surpass what your compensation is from your daily jobs or businesses that you run, is nothing but icing on the cake. You can't deny that. So the attraction of trading by retail traders is very high. Everyone wants to be a trader. Everyone wants to make big bucks, but no one wants to put in the sweat and the tears that are needed in order to prepare themselves to be a successful trader. And that's great for guys like us, because if everybody was a successful trader, what would I be? I would probably be extra successful. But all kidding aside, very few people, very few individuals are truly successful traders, because they don't have the personality, they do not have the risk profile, they do not have the technical know-how, and they certainly have a heck of a lot of emotional know-how on how to react to noise, quote-unquote noise in the market, and automatically extrapolate that that is going to be what it's going to be. But it's never like that, and I show it every single day. So this article that was written, The Death of the Human Investor, that applies to you all. I'm human too, but I control my emotions far, far better than 99.999% of traders out there. No question about it. You guys have seen me in action. I don't flinch when the markets are down 400, and I don't lose my head when the markets are up 300, 400. It'll take time for you guys to get there, but you got to keep trying. And once you never get there. No one can completely take away the emotional factor in investing, because it's real money, unless somebody's just, you know, giving us a big stock of bullcrap and saying they made this and this and this. But when you ask them what they made, they can't even tell you what stock they made it on. So those are fake traders. There's a lot of fake news out there. There's a lot of fake traders out there. And there's a lot of paper traders who like to talk big. Well, we don't do that type of business in our service. This is real trading with real money, real losses, real gains. So this thing that I came out, I laughed because this is exactly my words. How many times have you heard from me that more than 70 to 80%, in some cases 90% of daily trading is run by algorithmic high frequency trading machines, algo HFT black boxes, supercomputers, artificial intelligence chips that read every retail trader. And somebody might ask, well, how do they read me? Well, they read you because they see your actions, what you're doing in the market, what stop losses you're putting in, where you're buying, what the price is, where you're putting out maybe some sell limits out there to sell, or where you're actually selling. They know exactly where they're going to panic you. All of you go through this every single day. Some of you are better at controlling your emotions. Most of you are terrible. It's a fact. I'm not going to go ahead and coddle people and tell them that they're great, strong, non-emotional traders. I've seen very few of them in our group, but we are far better than what's out there. Out there, they're all monkeys on hot tin roofs. Here, we have limited amounts of monkeys on hot tin roofs. And if you think that you feel, if you think that you feel, and this is real important stuff that I'm telling you, because this is what makes the real money. And if you feel that you can make excuses in your head all day long, why you sold early, why you panicked and sold for a loss while it went the other way, why you're not watching the charts at all and making an emotional bet, oh, this is going to happen after 2 p.m., this is going to happen, this is going to happen. Well, it ain't like that. This ain't your grandpa's market. Every word, terms that I use. And now, one of the top, and this guy is fantastic, and read the article, I'll leave it to you, from JP Morgan, comes out, and this is his words, that the human investor element in daily trading, weekly trading, monthly trading, in trading period, is almost non-existent. So listening to all the emotional freaks on all the other forums, what they are buying, what they're doing, where they're getting all excited, off to the moon. Oh, now the market's going to, now the market's going into the gutter. All that stuff that you read, whether it's on other forums, not to mention names, whether it be StockTwits, whether it be Yahoo Finance or other chat rooms, it's all garbage. The only way, and certainly read this article at your own time, okay? And I love this article. This is like my words now completely in the media. A lot of the stuff that I say show up on the media like a couple of days later anyway, or a couple of weeks later. It says, by trade volume, machines and exchange-traded funds, ETFs, are leaving the traditional stock picker in the dust. And that includes a lot of you. So I'm going to move this up because that's the reason why I want you to read this. Wake up time. Look, I have nothing to gain whether you make money or lose money. Seriously. And I've said that before. It feels good when I see a good bunch of my members making solid money, not because they just happen to fall into the trade, but because they put in a little bit of time and effort, and it doesn't really take much. Nobody's asking you to become a PhD in and get a advanced degree in technical analysis. Very few of you, at some point, maybe some of you will be better than me, can draw charts like I do. It comes naturally to me through a lot of time and effort over many years, and I love what I do. When you love what you do, it's a passion. So the way I draw my charts, it comes naturally to me, and then at the same time, I look for all kinds of inflection points, and I look for patterns, I look for indicators, all kinds of stuff. But looking at the chart pattern, I can basically, if I just showed you the chart pattern without any of these lines, you guys would have absolutely no idea where this market's going. And that's okay. My job is to basically structure the charts in a way that you all can benefit from it. Now, if you're not even going to bother looking at it, well, that's your loss, not mine. So I'm not here to harp on you guys on this, but seriously, that article seals the deal. The top guy at JP Morgan, who's one of the best technical analysts out there. And he doesn't come too often. That's why none of you know his name. And I won't say his name because till you read the article. Google him. Okay? He was on CNBC earlier. He doesn't show his face much. And he's saying the same thing that I've been preaching for years now to all of you. So start getting serious about tracking the charts. You don't have to draw them. I do all the hard work. You just have to read them right. And for that, you have to spend some time, energy, and sometimes a little bit of money, very little, taking the advanced coaching sessions, working with me on that. And you know, every person who's taken it has one way or the other benefited in some form or another. For some people, they catch on after the first 5 sessions. Some people, it might take 15. I have members who've been taking these ACS sessions for years since I started the service. They constantly keep on mentally calibrating themselves to understanding the charts better and better. Because just because you draw a chart doesn't mean it's going to get there in the next 15 minutes. It's you learn a skill and you have to adapt as you go along the way. But at least you know what I'm showing, where the levels are, and that's exactly what these machines do. So the bottom line, before I go ahead and explain a few of these charts in a little bit more detail, especially for a lot of the new members, welcome, that we have Niraj, a returning member, Andy, Ankush, a returning member. I don't know why you guys left anyway. We made a heck of a lot of money when you guys were gone. And then we have great new members like Newbie, Mike Harrington in the past month or two, Jody, great person, and then we have K-Bot, SK, all within the past couple of months. So for the newer members, it's a little bit of a learning curve, but let's move on. So bottom line from that first statement, the machines are going to dominate your trading life. You do not. The only way you're going to survive it is you start to understanding my charts to a large degree, spend some time, lots of instructional videos on my YouTube channel, take the ACS classes, feel the difference mentally and in your P&L. That's all. Now, saying all that, we have another new member who just signed up today. Come in. Mary, MW, welcome. If you missed the first part of it, it's going to be, like I said, it's going to be, it's recorded, going to be sent on the YouTube channel, uploaded. You can listen to the first part of it. The first part of the session, Mary, we were talking about, I believe you just signed in now. We were talking about this, and I'm not going to go over it again, but the death of the human trader. We actually spoke about this extensively as I speak to all my members directly when they first sign on. And this is exactly what I was talking about. The death of the human investor, all machine driven. So live in this machine driven world, or you're all going to be, or else it's going to be the same old comments. Oh my God, here we go, you know, or wowzers, here we go. You know, the same old stuff that you hear from emotional traders all day long. Anyway, so let's move on. So first and foremost, when you're looking at my charts, and I'm going to go through a bunch of them, here's a chart of the Russell 2000. Without really getting into it too much in detail, I've drawn some structured lines that people who are a little bit more advanced can understand the patterns and such, but you can pretty much see what's going on here, where the levels are on the downside, where the breakout points are. These are the breakout points, obviously. This is your breakout line. Sometimes I write it, and sometimes I don't. So here we had the rejection point, which was on June 2nd. And then we attempted to, and then we did all kinds of inverse head and shoulders and volatility triangle. I mean, volatility moves, creating a large dragon bullish type of pattern. And then we had a monster move, which we were certainly positioned for because I was buying ahead of the game, which emotional traders never do. They very seldom buy ahead of the game because they always believe in some perfect moment when it's okay to buy. I'll tell you when the perfect moment was. Can somebody tell me when the perfect moment was within the past week or so to buy and make a crap load of money? yesterday and more so today. So they could be done for the next 6 months, to be honest with you. When was the perfect moment? Can somebody tell me? I want somebody to step in and tell me when the perfect moment to buy was within the past 7 days.
When it was under 1400.
I'm not asking you, yeah, you're right. When it was at, not under 1400, way below that. 1350 was the actual perfect moment. That's not what I'm asking, SK. I'm asking what day was the perfect moment within the past 7 days to really pick up a good chunk of the market. At least take some moderate positions and just be ready. And I alerted everybody on that. When was it? No one remembers? Another case of emotional senility, I should say.
After Comey testified?
That's way back. Was that in the last 7 days?
I think so.
I'm sorry, after Comey what?
Testify. Finished testifying.
After Comey finished testifying. What day did Comey finish testifying?
He testified on Thursday.
No.
The Thursday before.
No. Well, that was the first flash crash. That was 2 weeks ago. Can somebody else answer me that question before I move forward, or am I going to assume that everybody is emotionally completely defunct? Nobody remembers, right? Okay, at least I proved the point that all of you, aside from SK, who actually ventured to answer, are great people, but when it comes to financial markets and trading, are basically get a 0 on this question. Last Friday, when we crashed, everyone forgot that? When the room was dead silent, and we were making 11 to 1,500% on Tesla shorts. Goldman Sachs was up through about 160% going the other way. Everyone forgot about the tech crash on Friday, correct? I'm just trying to get you guys to wake up a little bit because everybody seems to be in a coma with their memory. Did everyone forget what happened last Friday?
No.
Okay. Then how could you not answer this question? Let's move on. So I just made a point here. Okay, we had one of the most brutal crashes, 3 to 4% on the largest capitalization tech companies, which took down a good portion of the market, and it looked like a one-way free fall. Just this Friday, which was 3 days ago. And everyone forgot. Beautiful. I like this. You know what this proves? You have a lot to learn. So bottom line is that from a tech, the perfect times are when it's that brutal, and technically I'm showing about those reversal candles, everything that an algo machine does. They look for exactly the same things I look for. And what I try to do is I try to premeditate and predict, which I think no other service does, maybe one or two. Predicate what's going to happen next, because what most people do, I know most traders do, but most other subscription services do also, is they go ahead and always stay reactive. They are always chasing prices. You keep on chasing prices. 9 out of 10 times, by the time you feel good about a price move, you are going to get clobbered. When you are predictive and you take some moderate positions ahead of the game, when you get this type of move, this one was good for 1,200%, which eventually was up more than 3,000%. You know what 3,000% means? Nobody knows here because nobody's ever made 3,000% on any trade. $4 calls on the Russell 2000, which we sold in the 18 to 20 range within a matter of hours. After positioning for the past 2 days, went to $40 almost, or 42. Okay? Actually, it was more than that because the one run was 900%, and then after that it was, no, the 42 were the cheap ones. Actually went to like somewhere around I can't remember exactly, but it was somewhere in the 50s or 60s, one of the calls. I wasn't there in the 50s or 60s. We were selling along the way. But the bottom line is, what the point that I'm trying to make here is that when the perfect moment comes on these type of crashes, okay, I had predicated, and it was completely 100% correct on the Russell 2000 from these levels and from this level too, from the 1350 level. You don't get the benefit of making 1,000% on your money, and we think it's a joke, but try to calculate 1,000%. Okay, you put $4,000 in, you're gonna be taking out $40,000. I think that's going to make you so confident and such a believer in technical charts that you'll never be doing anything else. And very few of you, in fact, none of you have ever done that on one trade. So can somebody mute the microphone, because I'm getting a lot of echo back. But in order to get these type of moves, which don't happen too often, but in the Russell 2000 it does, on the IWM, this is the IWM. Okay, because it moves, the IWM or the RUT, which I generally play, moves in increments of $10. You will never catch these moves if you're sitting around with your emotional head, not following the alerts, and basically buying when you feel comfortable, which is generally around here. So what happens is you make this little money, then comes a little sell-off, and I know exactly what you guys do, and so do the machines. You sell, you go up a little bit, you're like, no, I'm going to hold on, I'm really going to try discipline of holding, and boom, right there, 3 sell candles come, which does nothing to the overall technical picture, but you sell. So between buying here and selling here, did you make anything? 0. Or maybe a dime, 10 cents. I'm not kidding. It's laughable because I see it all the time. And then the complaints start. Well, nobody really starts complaining at me because they know I don't deal with complaints. I don't deal with excuses from myself. I don't deal with excuses from other people either. You can't trade manage your own trade? Well, take a walk. This is like this is coach talk. Okay, this is tough talk. I don't mean anything harm. I want everyone to make money. I want everyone to do those 200-300% type of movers that I tend to do a lot. I want everyone to be in the same boat. But I see very few of you doing that. Well, that's your loss, not mine. So bottom line is that in order to catch these type of moves, you need to be positioned in these zones. And here, it's like basically shooting fish in a barrel. Okay? Go somewhere in Texas, they shoot fish in a barrel, right? So it's like you just sell wherever you want because it's just shooting higher. Money is raining. But in order for that money to rain on your P&L, you need to be positioned well ahead of the game. Not days and days, sometimes just a day or two. So all these big moves, all these massive moves, okay? And nowadays I've been starting to show the screenshots of the actual performance figures. So people wake up a little bit. When I put out there that I bought a S&P call at 2 and I'm selling it at 11 or 12 within a matter of hours, in some cases, let's say a day or so, because I positioned myself, so I bought it and it's happened many times. 2, and it's gone to, let's say, 16, that's 700%. I get a response from some members in the chat room like, wow, that's amazing. Here's my question to that person and to the people who basically SOA or sat on their you-know-what on the sidelines. Why didn't you do it? Why couldn't you buy 1 call? Why couldn't you buy 3 calls? 1 call is $200 and you're selling it to $1,600. That's a $1,400 profit. That doesn't change my P&L, I'll be honest with you. But for somebody who's trading with smaller money, that's amazing. Or $2,000 going to $16,000 is somebody with a moderate size account, $2,000, which is not going to 0. Maybe they'll lose half of it if things don't work out at all. So a risk of, let's say, a loss, you're risking 2,000 to lose 1,000, let's say, you know, hypothetically speaking, because that's really what happens. You buy these calls, they pull back pretty much quickly on any one of these red candles. That's SPX trading. Okay, it's not like you buy and immediately it starts to run up. You gotta buy. I've said this many times, and I explained this very clearly on the private advanced coaching sessions. You buy something at 4, it's going to slip to 3. It's possibly going to slip to 2 within the next 15-20 minutes, because that's how these candles are designed. If too many people are buying at 4, let's say an option, or let's say the 2400s, when it was at 2400, the market, the S&P 500, let's say, the machines, if too many people buy at the same level, what do you think the machines do in the next 10 minutes? I need an answer, please.
They go down.
If the majority of retail traders buy at an exact price, or give or take around that price, what do you think the machines will do over the next 15 to 20 minutes, if not the next 5 minutes? What?
Try to push the price down.
Exactly. Who said that?
Me, Mike.
Okay,
Harrington.
Mike, you're not that special. I don't know many people called me, and the last me's that I saw, I don't even know them. I'm just kidding. Thank you, Mike. Mike has the perfect answer. They will immediately shake the tree, because what algos do, these high-frequency trading boxes, when they see a cluster of trades, a high volume on a certain level, what we call, you know, let's say this is the cluster where a lot of human investors, retail investors, the stock twits kinds, the other forum kinds, okay, get excited. They will immediately start hitting that cluster through sell programs. And the algos also do a lot of funky stuff. Don't want to get into it now. They put fake, they spoof. They throw in fake orders in there just to push down the price, as Mike correctly said. And when you stop pushing down the price, what do you think happens to you guys? You start to, you know, if somebody's not watching the charts and just watching the price. Price watching is dangerous business. Of course, you have to watch the price because the value of your investment. But I'm talking making a determination on a trade by just watching price is the most stupidest thing ever, and all of you know it in your bones. And it doesn't matter how many times I try to teach people, some people never change. But that's okay. Not my loss, their loss. But at least I'm doing my job. So like Mike said correctly, they start hitting it, this cluster, and they start pushing. They start pushing the price down. For just like, let's say, for example, looking, okay, here, big candle. So instead of buying around this level where I'm seeing the candle formation, putting out the alert, hammer reversal, all the stuff. I mean, I don't think there's many other services that put the actual technical patterns that are taking place at the time of the trade, especially when it comes to the indices or some big cap stocks where the candles are very defined and we can see it. I actually put the frigging pattern down. There's a reasoning behind why I'm doing it, not just buy it, see you later. And on top of that, more than 90% of my trades have a chart attached to it. Can't beat that. You got a GPS and a car key. Only thing you got to do is don't drive drunk. Or on Vicodin, all right? Or on Xanax. You're going to crash. So the bottom line is that they start hitting it. So key is with volatility trading, specifically with any volatility trading, whether it's especially the indices, the SPX and the RUT, the IWM, the QQQs, which I don't do that much, but, you know, have done it, is when it comes to volatility trading, you have to dollar cost average. Old-fashioned traders, even to this day, said, no, you cannot buy when it pulls back. That's a loser's game. Oh, yeah? Good luck, man. Just look at my performance record and tell me it's a loser's game. It would be a loser's game if the market simply went down and simply went up without any volatility. Then it would be a loser's game to buy here and then keep on going lower. But if the volatility is, which is always the case, look at this chart pattern in front of you. It's one heck of a volatile chart with some humongous returns that we have generated, and you have to take staggered profits along the way. So what is this, a straight line up? If somebody answers yes, they should completely cancel their membership and just go away, because I can't change you. I'm not here to change anyone anyway, but still. So the bottom line is, it's never a straight line. It is never linear. In the old days, market used to go up like this. There was never this type of volatility for a simple reason. There were never machines trading the market, and humans basically are more linear. But the machines purposely create volatility for whatever reason. You know, all kinds of political news, international terrorist news, domestic economic news. They create volatility. What I try to do is smooth out that volatility, explain that this news is going to be important, that's going to be important, blah, 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 and make sense. I told you the Comey testimony would do nothing for the markets, that it would be fine. Markets would go higher. It did go higher. It did go higher. What's he going to do? Take Trump out of business? No, he's not. So the bottom line is that the bottom line is that in order for volatility trading, which I'm not going to get into the specifics right now, but you got a dollar cost average, and once you dollar cost average, then you get these, you know, let's say you didn't buy the first candle, you started to buy the second candle, little consolidation move here, nothing changed. All the technicals, you know, just simplistic terms that I'm showing you, you know, and my alerts are saying just upside intact and all kinds of stuff. And of course, this is the most simplest of the charts that I show. The more complicated ones are the ones that I show on the Algo HFT platform, the quad platform, which are just absolutely fantastic. They are the true algo charts, in my opinion. So right there, when something like this happens and your cost average is, you know, you got to cost average down, then only can you make this type of money. Otherwise, you will never. End of story. So bottom line is, the point that I wanted to make is, when I look at this chart, I see upside. I see upside, but at the same time, is it not possible that here, these waves, which are known as Bollinger Bands, that it's going to come to the lower end of the Bollinger Band? Sure it can. It can do just this. It could be that the fat man in North Korea decided to basically lob another missile which landed very close to Japan. Of course the futures are going to open down. Is it going to change the whole makeup of the market? No. Unless something really hits a major city, I mean, believe me, it's not going to change the nature of the market. I've said it to people before. I've said it again. I'm a survivor of 9/11. I am tough as a rock. I lost friends. I almost died myself. So what's the big deal? You think French elections, I mean, a terrorist incident in France, terrible. All terrorist incidents are terrible. All. Are going to completely going to damage the market? No. Every single time there's a terrorist incident out there, markets have gone higher. Yes or no? Yes or no?
Yes.
Exactly. So all that garbage that you guys hear in the news, any news, whether it's right-wing media or with left-wing garbage and kooks, you know, coming out from the extremist ends on both sides of the spectrum, don't care about that stuff. The charts that I'm putting across will tell you when it's time to go really short. And if you're not with my service, you will never know. I can assure you that, because I've gone through cycles in markets, many cycles in markets, to really get an understanding when the so-called big one comes. And it's a couple of months off. So saying all that, if it falls here to the lower Bollinger, these lines are not drawn to make this chart look pretty. These are actual downtrend lines or fan lines, right? So is it not possible that the market comes down here and it drops from 1428 down to 1416? Does it change the makeup of this uptrend line, this blue line? Nope. All it does is resets this stochastic to go like this. Just the way it did it here. Just the way it did it here. As long as the uptrend lines hold, as long as this downtrend line holds, because it is possible that it breaks 1416 and heads towards 1412. Is that the end of the world? No, that is just a coil spring waiting for it to go like this. I'm just giving an example because it happened so many times, and go like this. Now, is that a guarantee? No. Is it a high probability trade? Yes. Now, if fundamentally something is changing out there and Trump tweets out that he has no plans for an infrastructure spending bill, he has no plans to cut taxes for small businesses and corporate tax reform, trust me, a one-way bear market starting right away. And then we'll bounce because of something that I'll explain at the end of this session, which will blow your mind out regarding all this infrastructure talk and all that stuff. All right? And that's more advanced thinking, but wait for it. So yeah, so if somebody's really understands my tactical charts, they can deal with it. They can certainly short. We did a short today. It was 26% in exactly 12 minutes on the SPX, which I pushed out and showed the chart clearly. And anyone who did that with a few, I did it with a few puts. And bang, it's a 4-figure profit. 12 minutes. Not the first time. Can you guys do it? Absolutely, because I'm throwing it out with the pictures. So let's stick to this here. Is it not possible it comes to a lower Bollinger, bounce here, fall into this red line here? Doesn't change the technical picture. But does it change the emotional picture to some of you guys? Absolutely. Can't help that. You guys gotta learn to understand these charts. And then if it goes here, then it does this. Because that is the nature of volatility, as you can clearly see. If this breaks, we are going to retest this breakout level here at 1396. And at that point, once these lines break, I'm going to be on the lookout for a nice fat short trade. Because as a tactical trader, even with a long bullish bias on the market, I'm a tactical trader. As you've seen many times, I will go short real fast. The Tesla short on Friday was worth from 45 cents, 40 cents, 45 cents, went actually to 35 cents. I picked a lot up at around 40 cents. Went to $10. That's 2,500%, ladies and gentlemen. Okay? $4,000. Let's say you bought 100, I'm just giving you a bigger number. Let's say you bought 100 contracts at 40 cents. And I beg people to do this because it was breaking at 40 cents. I sold most of mine at 5, 6, and 7. I was out. I didn't even see it hit 10, but it did. 40 cents. 40 cents going to $4. Let's say it went past $4. That was my second sell. That's 900%, not 1,000%, 900%. So you bought 100 things, 100 calls here. You put, how much did you put in here at 40 cents? Quick, guys, you're option traders. 100 contracts at 40 cents is how much?
4,000.
Thank you. All of you guys that are sleeping, because Sheila seems to be answering all the questions. 4,000. Okay, no, I'm serious. Everyone's like, like in a coma, like, oh, okay, 40 cents times 100 contracts. I mean, come on, wake up, guys. Want to be options traders? You got to just answer like she did, quick. 4,000. So where is the 4,000 now at $4? Quick. Huh?
40,000.
I'm sorry, what?
40,000.
Exactly. Now, is this something I just made up? It just frigging happened on Friday. Now, who's saying to put 4,000 in a lotto? I wouldn't really recommend putting 4,000 in a lotto unless you really know what you're doing. I know what I'm doing, so I put some decent numbers sometimes. If I see a real break, and of course the crash helped. Somebody said, oh, you got lucky. Sure, I got lucky. I got lucky because my technical charts clearly showed that big fat candle breakdown on Tesla and on NVIDIA. I could have shorted Amazon and all that stuff, but I was doing too well playing the Goldman Sachs, and I was doing some specific trades. Can't do it all. So, and when I'm doing lottos, which are expiring the same day, I'm not going to put like, I'm not going to buy $4 or $5 calls or puts. Buy the ones which are $1.50, 45 cents. They move fast. 40,000 bucks. Is this a joke? What about you bought 10? 10 is 400. You think your significant other, if you ever discuss business with them or tell them what you're doing, I'm sure you tell them, oh, I just did a winning trade. Boom. I'm going out to dinner with them. Do you ever tell them how much you lose? I don't think so. My wife doesn't even give a hoot about my trading. She knows I do my stuff. She knows I'm smart in what I do. It's cool. It's cool that way. So, but bottom line is, do you tell your significant others, hey, I just lost $6,000 in this trade. Oh, boy. So bottom line is that but how would you feel to say, hey, listen, I just put 4,000 in that trade, and in two hours, this clueless trading is out of control. I made 40,000 bucks. She will not only remarry you, she'll actually give you a kiss because you haven't been kissed in years, maybe. I'm just kidding. Okay. So bottom line is that she'll be just like that new wife you met.
Stay away.
All right. So get there, guys. All right. Get there, guys. Money talks, and you know what walks. And I'm not the most I'm a true capitalist. I'm not a money-hungry pig, all right? There are bigger things in life that we have a purpose for. But when it comes to this business, it's all about money. It's not about your emotions and what you think in this. Feel good. And feel good comes from making money. So let's say you bought 10, which would be a moderate amount to buy, 400 bucks. Let it go. If you lose that 400, you're not going to be out on the street. How many times do I have to explain this stuff? But you know what? Some of you are getting it. And getting angry at yourself, any trader who doesn't get pissed at themselves is not a trader. Period. I get so pissed at myself sometimes for leaving stuff on the table, like the last 3 days that Tesla and Nvidia were running up. I knew that the crash was going to happen. I just knew it. I saw the excitement. I saw every single time they're like talk, even in our room. I'm not even recommending it, but everyone's chasing Tesla. And then what happens? The algos come, bang. See you later. I think there were some members in our room who lost a bunch of money on the Tesla long side. What? I mean, not Tesla long side. I mean the Nvidia long side. Because everybody and their grandmothers is trading Nvidia. It's the way they used to trade Yahoo back in 2000. Stupid, stupid, stupid. But we went long too. And look what happened with that. So let's move on. That's tactical trading, ladies and gentlemen. Let's take a look at this here. So this is today, right? I just focused into today. This is today. This is lovely today, starting off at midnight, in Lala Sleepland. No, this is when futures started trading, actually. At 6 p.m. 6 p.m. right there. See? That's 6 p.m. Sunday evening. Right? So 6 p.m. Sunday evening when futures start trading, and this is very important chart. This is all happening while you're sleeping, and then the market starts here, 9:15, 9:30, and all this happened while you were dreaming of running around the fields or running around a beach or something, right? Or whatever you're doing. So this is your pre-market movements. Then comes the movements right off the bat. Market shoots up. What's the first alerts that I put through? If you don't look at my alerts, or if you're busy that day, didn't trade, read my alerts at the end of the day. Takes 20 minutes to scroll through. What did I say? Can anyone remember what I said the first part of the day about profits? I'm not going to waste my time. Mike said trading is like a game of golf. No matter how good a day you're having, you look back and rest, you could have bad. Why is it just golf? It's everything in life. That's an example, but why is it like golf? It could be anything. It's any skill that you're trying to acquire. You can always get better. It's not just golf. I live next to the most expensive golf course in America. It's called Liberty National. Look it up. Built by Paul Fireman, the Reebok chairman's son. Okay, trust me, Liberty National. You know what do you call it? Membership fee is? It's private. It's completely private. You have to be referred. You know what the membership fee is? Take a guess. Anyone who knows golf. Take a guess. What's the annual membership? What is the annual membership fee?
50,000.
Can somebody else answer?
250,000.
Yeah, well, you guys are getting close. 460,000 last year. I see celebrities all the time because my dog's peeing on the side of the golf course when I go take him out in the morning. I'm not kidding. Okay? And a monthly that's 460,000 to join, 400,000 plus. Plus you pay 20 or 25,000 a month. Good stuff, man. All right. So bottom line is it's beautiful. It's beautiful. It's right on the water. It's the only golf course in America that is 5 minutes from a major metropolitan city, in this case, New York City. You know, you're overlooking the Statue of Liberty. Well, that's the corner that we live in. So saying all that, let's just put it this way. So the first thing that I did in the morning, I said, take down large profits. There is going to be, in the first hour, there is going to be profit taking. That's tactical trading. Any idiot who didn't do that has nothing but to suffer. And I'm going to say, it is your fault. In the old days, a market would open like this. This is really important. A market would open like this, like it opened, big sharp spike move, multiple candles. Let me clean this out. Multiple candles right there. All right. And by 11 o'clock, it's up here. This is the market opening. Beautiful move. Emotional traders like, that's it. It's going higher. This is it. This is it. Bang. Gives everything back and tests the lows again. Happens every day, guys. And many of you still don't get it. I said even before it was going to happen that the algos are going to take profits. And this is just a small sampling of the chart. On my other charts, I was seeing the levels it was going to get hit. And I even told you guys that. So if you are not a tactical trader, as in just staring at the charts and say, okay, this is the level it's going to go, it has to be visual. You don't have to calculate the numbers. You know, numbers on the actual indices and stuff, you know. But just look at it. That's it. But the point is that if anyone just opened up and they sold immediately, then obviously they made very little, or they're killing themselves because it went up after it went like 6 candles higher and tested the pre-market 8 o'clock high right there. Right there. That was the pre-market 8:15 high on the futures. Now, why is the futures important for some of you who are new? It's important because it controls your P&L. So it gives back everything. I'm sure you're seeing on my charts what's going on. It's cool. It's just standard resets. I even put it out there. And I put it out there before it's going to frigging happen. And then, and this is not just today. It's every day I'm doing this for you guys. And then it bounces, does it again. In the meantime, by this time, my uptrend line is drawn because now I have room to draw this line. And this is a clear roadmap on what's going on. And then I shorted, if you guys remember. Of course you remember. Some of you did it or didn't do it. I don't know. I bought the puts at $3.60. Within 12 minutes, they were at 5. Because each candle, when they move like this, thanks to the machines, that's 10-20% on your money. So the whole purpose of my tactical trading is to capitalize on the movements of these candles. Now, you don't need to be a 5-minute trader. If it didn't work in 12 minutes, it would work at least in half an hour. How would you like to get something at 3 and sell it at 5? I mean, come on. Or 3.5. But bottom line is, then it created a triple bottom. And on the other charts, it created the reset. And then at that point, people who have worked with me on ACS know very well what this pattern is. It's a dragon bullish pattern. And bang! And I went long the SPX calls. You guys know that. At 3 and change. Those SPX calls, end of the day, were how much? They were almost $8 up here. Or even up here, it was 7. And then they went up more. And then there was a, 1 second here. My apologies. This is what I should be looking at because the patterns look so similar. My apologies. But the same thing though. This was actually midnight that all that crap was happening. That's for futures trade. This was it. This is the one. So right there at 9:30 market peaks. By 9:45, 15 minutes. You literally had 10, 15 minutes right at the open to take profits. And I said, sell, 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 or sell large profits down. I literally looked at my P&L like, boom, right up in the morning. I'm like, all right, take a whole bunch down. Beautiful. You guys can do it. And somebody says, oh, I don't have enough of the capital to do it. That's garbage. You can do it with small capital. Okay? You can do it with small capital. So that excuse doesn't count. So it has a double barrel bearish engulfing. That's when this red candle encompasses the whole body of the green candle, right? You can see that. Tries to hold it a little bit, goes up a little bit, hits the upper Bollinger. Now you don't have to microanalyze this stuff. I'm putting the charts out. All you got to do is look. And then it drops. This is where we made that 12-minute trade right there. And then I went long. And boy, that long just within the next 2 hours, beautiful. You buy it at 3, it's at 6. By the time it gets here, it's almost at 8. I'm sorry, it's almost at 7. All posted on the Twitter feed. Just got to open your eyes, read it, act on it. Or if you're busy during the day, read it later on at night and feel like slapping yourself on the head because you didn't make that money. And now, this is the market after hours right now at 7+. Tactical trading. No excuses. So let's look at a couple of quick charts here. Let me show you this one. So let's say you are looking at the actual picture here. This is the IWM. 1 second. Which I've been bullish on since the 133 mark on a short, 2 Thursdays ago after that first flash crash that Sheila. Okay, Andy, good question. He goes, should you wait 1 hour after trading day starts before making a trade? Andy, a lot of the times within 1 hour, we've already made most of our money and just sitting there just going, okay, what are we going to do? Those rules, Andy, apply, Ankush. Those rules, I call you Andy, right? You go by Andy? Okay. So those rules apply in the old-fashioned day. You still don't quite understand, Andy, that all rules of, oh, if you buy here, you sell here, this exactly happens at that time. You don't think the machines know those rules? I mean, not rules, those type of human behavior. Why do you think they always said market opens up and by 10:30 the profit taker comes in? Because in the old days, and when the New York Stock Exchange dominated, my office was right next to the New York Stock Exchange, okay, for many years. In the old days, when the New York Stock Exchange had 400 floor brokers running around. It really was a stock exchange, and now it's big fancy computers and a few bunch of guys running around with their headsets on. But when it was a real stock exchange in the old days, the way it was, the traditional way, what do you think the guys did if they had a big open? They took their profits, went out to get coffee, have a smoke a cigar, shoot the crap outside, and trading slowed down at around 10:30. That's the reason why those old stupid rules work. You think algo machines and high-frequency trading machines take an oil break? They said, oh, yeah, I'm going to just go shoot down a WD-40 because I feel really good about taking a 200% trade down because I traded with Crudosate Trading. No. So coming down to it, Andy, that's a damn good question, but no, it does not apply these days. Is it true that when you have a big gap open to take profits? Absolutely. Absolutely. If you're set up as we do ourselves and you get a 6, 7, 8, 9, 10 point gap open on the S&P 500, of course you're going to take some profits. So generally speaking, the profit takers do come in. The machines do operate. Before it used to be the 10:30 cigarette break, and go have some coffee or take a run to the bathroom, now space can happen in 15 minutes, just the way it happened this morning. Am I clear on it?
Yes.
Yeah, I'm telling you the reality of the markets, not the garbage you hear from other services. This is the way it works. So machines operate in a completely different time frame. Many of you are IT guys, very smart guys. Many of my members are IT guys. Many here are. And you guys understand the speed and the dynamics of networks. Network speed is just going higher and higher and higher. So, well, so are the trading speeds. It's never going to slow down. So, bottom line is, I look at this chart here, and this is exciting. Now, is it exciting because I bought it here, which I did, and I'm holding it all the way here because I'm a frigging genius? No, I'm not. I'm buying it here. I'm taking a little profit here. I'm reloading. I am selling here. I am not necessarily always shorting some of these because it gets tricky on powerful markets. But then again, I'm buying the reversal candle down here. And you all who are active, people like Sheila and other people who are active, you guys know, I'm buying the reversal candle. Beautiful, beautiful. These lines are drawn to perfection. In fact, these are the blueprint of the roadmaps that the algos follow. And you guys have a chance to trade these charts for the few bucks that you're paying every month for the service. I could just throw these charts out and say, guys, the roadmap is out there. Good luck. And any of you smart ones can easily do it. But I don't. I keep on going in, reinforcing the trade, telling you what to buy, blah, blah, blah. But these roadmaps are clear. These channels are clear. Look at these inflection points. Somebody once said, how do you draw those lines? They're amazing. A couple of people have said that to me. And I said, I have beautiful crayons. No, all kidding aside, the lines I can draw so symmetrical, so definitive is because the machines are definitive. If the machines didn't create these patterns, then I wouldn't be able to draw my charts like this. Does everyone understand that? Yes? No?
Yes.
Okay. That's it. But when I'm looking at a pattern and I'm drawing these lines and they fit this perfectly, I am excited. Excited because making money and more chance to make more money. Somebody who is a complete novice, emotional trader, whatever garbage, lemmings, following, so many traders just follow like, ooh, big trade going out on that side and the stock's going to go there. Yeah, good luck. That's why the tech crash happened, because all the sweepers took the lemmings. You remember the story of the Pied Piper? What happened to all the rats and the lemmings? They fell over the cliff, right? That's what happens when you just follow cluster trades. Gotta be ahead of the game or a little bit off the herd. That doesn't mean you can't follow a momentum trade. That's fine. We have done enough momentum trades. We're still doing a momentum trade, which is working like magic, like Tesla. There are many momentum trades, but you cannot follow the herd by saying, oh, there was a big buyer at that point. Yeah, so what? That could be an algo. I'm not saying this happens, but it does happen. Putting in a fake order to show that it's a big order out there for a few minutes, and the order moves away. So some services will report big buyer at that level. Yeah, great, good luck. By the time you follow the sweepers and there's nothing wrong with it to know what they're doing, but if you follow them extensively, you're not going to make it. Good luck. So here we have a beautiful pattern. I'm not going to get into the pattern analysis yet. The channels are beautiful. Position yourself right on that reversal candle and made yourself 300% on that trade in 2 days, because that's just the way it works. And once it gets there, everything is overbought. A lot of excited traders out there. Oh, this is it. Now it's really going to go, whatever. No. I've been showing this chart over and over again on multiple time frames. This is the Russell 2000 or the IWM ETF, right? And boom, the sell programs come in. Creates now the bottom, which simply retests this red line here, which was the breakout line. To me, it's like, it's clear as day. Is it easy to trade this volatility? Not really. It's a little hard. But at least you know what the levels are where you're going to be buying or putting some real money in, or where you're going to be selling and getting the heck out of Dodge. Right around here, I can assure you, on the outside world, outside Clueless A trading, there were no buyers. there were no buyers because they're all expecting it to crash and burn and the Russell 2000 just keeping on going down. Nope. All it did was this was a part of this big breakout. It came and tested that breakout. And I talked about it. Impulse breakouts are tested. This is known as an impulse breakout. Want to learn all this stuff? Sign up for ACS. This was a sudden, sharp short squeeze. And the ones that I explained is very clearly on the ACS that I did privately this weekend. And the members who attended it, and many were sent the link, the ones who are paid students, they know very well what I'm talking about. I explained it very clearly. They come and retest that level. They want their money back. I'm not going to explain what that means. Once they get their money back, a new trade starts. And this is the new trade that started. We played it. Now we're here. Now, if you look at this channel, and I'm going to clean out the picture here, this is a beautiful trade. Now, trades are never guaranteed, but it is a high probability trade. I compress these channels. I believe very strongly that this high of 142.9 will be taken out, and this upper channel is going to be engaged. Between here and here, you got at least 100, you got 20 S&P points between here and here. That's close to 160% on your money. Not much I can say, guys. Uptrending 50, 34-day moving averages, 150-day moving average moving higher. All these levels have been engaged. Could possibly be re-engaged again, but so far, good to go. Now here's a picture of the Russell 2000 real granddaddy, because which I've shown quite a few times now, which is the IWM's real granddaddy, which is the Russell 2000. Take a look at this chart here. I'm going to take these channels out so it's clear. I remind people that back in the days, and not that long ago, I used to subscribe to all these newsletters, right? And all they did was send a newsletter at the end of the day, and many of them are still around, and said, okay, this stock is going to just do this. And those were the days back then when stocks actually did what they were supposed to do, but all they did was show some very simple charts and said, okay, this is what it's going to do. See you later. Didn't work, whatever. Well, my service is not that. We are showing the reality and exactly on real time what's going on. So you are in a better position to act on it. When I look at this chart, to me, this is exciting for many fronts. First of all, look at the channels. You don't need to be a genius to figure this out. Just follow the channels. This is a weekly chart, so it's not something that's going to happen in 1 hour. But by the end of June, early July, by July 4th or so, is it not possible that the Russell 2000 gets up towards the 1500 level, or at least gets up towards the 1450 level? Let's not go too greedy with 1500. Absolutely possible. Look at this. This is attempting another breakout on multiple candles, multiple bullish candles. Well, somebody will say, hey, it tried so many times before. Well, it tried and it's trying again, and I explained the reasoning behind it very clearly in the private ACS sessions yesterday, making a very strong case for the Russell 2000 to break out to higher ground and make a new higher high. Doesn't need to go to 1500. If it goes from here to 1500, you just made yourself 600% on your money. Well, I don't think that's going to happen that quickly. But the bottom line is, you hear the media now who hated the Russell 2000 U.S. Small Cap Index now liking it a lot. Now they're talking about the IWM being stronger than the SPX, blah, 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 because they're all lemmings. Everything on this chart overall, technically speaking, is on the right track for a big fat breakout. And by the time you buy the breakout, I'll be happily selling it to you for very nice profits. And you will make a little profit. And if you don't look at my charts, you will give it all back to Mr. Market. Guaranteed. That I can guarantee you. Position yourselves early to make the beautiful gains that are coming. Position yourself late. You will make a little, or make nothing, or lose money, because this type of red candle is going to appear from nowhere, and you're going to be sitting in the chat room going, hey, what happened? What happened? Well, what happened is quite simple. They just mugged you in the middle of the trading floor and took your hundreds of dollars or thousands of dollars and said, see you later, because you were being a slob and an emotional trader. That's what algos do. Nothing to it. You guys have all gone through it. Just minimize that type of stuff. You'll always have losses. Losses are part and parcel of the game. But as long as your gains are far bigger than your losses, that's how you move ahead. Real simple. Nothing magical about that. So this is a great looking chart on a swing basis showing you where this stuff is going. Now, let's take a quick look at some of these charts. What time is it now? It's 8:51. So I wanted to keep it within an hour, but looks like I didn't. All right. So here is another one that I want to show. This is a absolutely perfect chart. It's as if a computer drew this. I'm not just saying, oh, I feel good about it. I'm just telling you the facts. This is the essence of this. I'm going to leave it here in the middle. This is the death of the human trader. This is specific algorithmic chart based on the quad platform, which is amazing. And some of you are using it. If you're not, do the free trial. 2 weeks to give you. Anyone who's interested, I'll send out the email link. They have a video demo. Call them up. Take the 2-week free trial. If it works for you, which I have no doubt it will, I have a whole instructional video how to set it up and everything. It's easy once you set it up. It's on autopilot. Between this, if you have the quad platform, which I pay like more than $400+ a month for this, just for this platform alone. I don't even trade on it, just for charting and my quotes and stuff. But they have a discounted rate of $120 or so. It's worth it. With this and my alerts, you have a very high success rate on managing your trades. Remember, it's not where you get in, it's where you get out. That saying has never changed. So I drew this chart and I showed it a few times to some of you. I mean, not some of you, to everybody. Look what happened. The market hit. Here's your big. This is the bear kill zone that I showed on a different chart. Once the market enters this zone here, okay, it's going to be a straight spike towards 245 and possibly higher, and it's going to be rapid. Just the way this was rapid, that's going to be rapid, and you won't have chance to buy in. And even if you try to buy in, it's your little voice in you going to say, oh man, I'm going to wait for a dip. I'm going to wait for a dip. Well, the dip never comes. When a market goes like this, as it does all the time now, fast up, fast down, and then the confusing trading band, which most of you get very confused about. I like trading these trading bands with small increments. And then, bang, it goes up. But you're neither here nor are you here. I was saying, a lot of traders, a lot of them, they're not making money in a bull market. They're not making money in a bear market. Where the heck are they making money? Maybe an underwater market or something? I mean, seriously. Traders are not happy in a bull market. Traders are not, and how can they be happy? Because they're not making the real money. They're making a little bit, they're giving it back. I know I'm true what I'm saying. I don't need to look at your faces to know this. Okay? Andy, sign up for the ACS and all those questions I'll answer. He asks, should a trader always buy calls and at the same time buy puts for the same stock? No. Whoever the crap told you that is an idiot. Okay? You can always have a protective put if you want, if you have a large common position. If you buy a call and a put at the same time, calls go up, puts go down, do you make money? Do you make money, Andy? No, you come out at the end of the day doing all the furious call put trading with zero in the bank. So it's a very good question, by the way. I commend you for asking that question, because whoever gave you that idea, which I know you, the stocks to streams that you hang around with, Andy, you will have a fundamental reawakening, because all these bears who kept so many people poor by keeping them away from the market, including the Santellis of the world, to be honest with you, Art Cashman, all he said every time the market went up 500 points, oh no, the bear market's going to start or something. And now he's acting a little bit bullish, right? Mr. Cashin, I respect the man a lot. I used to have drinks with him right next to it at Bobby Vans on Wall Street. I'm not kidding. Okay? I didn't really sit around chat with him because he always had his couple of New York Stock Exchange guys around him. And what the hell am I going to talk to him and tell him that he's a dogmatic bear all the time? Okay. So bottom line is that these bears implanted in the trader's head, God, buy the puts, buy the puts. Every time the market goes higher, oh, buy the puts. It's going to end of the world. This market is going to go a lot higher than any of you have ever imagined. You know why? Can somebody answer me why? I mean, some of you know the answer because I've explained it. But why do you think this market's going to, just on pure, forget technical all that stuff, why do you think the market has a lot more room to go? Let's say within the next 6 months or a year, whatever, much higher than where we are right now. Why? Let's see who gives me the, huh?
Lots of optimism because there's a new economic philosophy.
Okay, don't take me the wrong way. What optimism did you say?
Well, there's a new economic philosophy.
Yeah, you said closet optimism, right?
No.
Go ahead.
There's a new economic philosophy.
Yes.
We're gonna try and grow our economy as opposed to subsidizing our economy.
Okay, don't give me that bullshit, okay, Mike? Let me move you back for a second with all due respect. That's garbage. The only reason the market's going to go higher because there's $6.3 trillion worth of cash sitting on mom and pop's thing, and mom and pop at one point will say, screw it, I'm going into the market. That's the only reason. All that stuff about, look, I hate welfare. I'm the purest capitalist that you'll ever meet in your life. Okay? The bottom line is very simple. Big fancy economic theories don't let markets go higher. Markets go higher because people get greedy. We are so far from greed. So far from greed. It's not even funny. We had a vicious rally since the election. The market's been going up since March 9th, 2009. We have gone up from 666 on the S&P 500. Okay, 600, and this is under Democrats. 666 to this level of roughly about 2,300 plus before the elections. Okay, that is a gain on the stock market of 2,500%. And mom and pop has basically, read that article, The Death of the Human Trader, of Investor, has basically done nothing with the stock markets other than funding their 401k plans and pension plans, which they have no idea what they're doing with those plans. Those plans and their home prices have gone up by 3, 4, 5-fold over the years. So all that closet stuff and this coming out of it, forget all that stuff. The reality of the situation is there is so much cash on the sidelines. Fund managers have been pessimistic. You guys have all been pessimistic. Even when I'm showing phenomenal charts that Tesla's going to go here or this is going to go there, you guys still don't take the trade. Look at yourself first. You will know why the markets are going to go higher. The day you feel that you have made serious money in the stock markets and you start to become lazy, like, oh, it's really easy, is when markets top. So in all due respect to everyone who thinks they know why the heck the market's going higher, I know better than all of you because trust me, I know. Okay? None of you are making the money you should be making. All of you are smart enough to follow my alerts, look at my charts, learn a little bit at your own time, spend some time learning on the ACS, and make a shitload more money, excuse my French, than what you're doing right now. You are miserable most of the days because you do not position yourself ahead of time and you sell too early. And that applies to almost every one of you. That applies to me at times. And if anyone says that I'm lying, feel forward to step up and say, you're full of crap. I am not. I know. End of story. So bottom line is that the economic agenda that's been put in place is a very positive one. It has to be put in place. So the bottom line is, which is under the Trump administration, very business friendly. But the fact is that markets, and here is what I was going to say earlier, markets personally as a market entity, and listen to, let me just go over this chart. So this chart, I drew all these channels and stuff from way back. Okay. And look what happened. It hit exactly that and it pulled back a little bit. Still very positive, very overbought. but for my students who have thought very carefully, that this type of overbought curvature is telling me that there's a lot of strength in the market. On top of that, it's monthly options expiration. So even though if we get a mild dip tomorrow, it's a buying opportunity for Friday or for Thursday and Friday, because monthly options expiration, which falls on the third Friday of each month, is on a Friday, this Friday, June 16th. And they will run up specific stocks and the indices up towards those levels. So this is a surge. We are at 86 here. You can see on the slow stochastics. That's very powerful. And this is certainly showing, now this is a rising wedge. It's possible that it can do this for Wednesday. It can certainly pull back a little bit. Here is your 50 moving average, 34 moving average. It's very possible it does this. But once it does that, it's going to do this. That's a very high probability trade. Where does my upside bias stop and I become negative on the short-term picture, regardless of monthly options expiration, is if we break what? Can somebody step up and tell me? Because I always talk about it all the time. What would make this pattern go negative and a short trade coming through? What is one of the lines here that is key?
Breaks the pivot.
That's right. Exactly. Thank you very much. Breaks the pivot. Real simple. You break the pivot in any meaningful way, not just a retest, right? Not just a retest. I said yesterday, we were going to break the pivot. We were positioned here. That's why we enjoyed the beautiful gap open this morning here, and another buy, and continued here. Then the minor short that generated 26% in about 12 minutes, and then we went long. Again, all posted on the Twitter feed. So if you were not positioned at these multiple bottoms that I kept on saying, go, 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 because my stows were moving like this, and every little dark red candle that came, internals were showing money's flowing in, money's flowing in. And then you get this type of reversal hammer. This red candle is like this. That's a hammer reversal. However, all this, ladies and gentlemen, this is the SPYs. This pivot breakout, we ended the day here yesterday. This pivot breakout happened after hours, because this is a real-time, full, what do you call it? It's a real-time chart, so it covers after hours too. So all this happened after hours, broke up, and then opened up. So if you are not here, you are not going to make those lovely 80% right at the open, or 100% right at the open, where I say, time to take the profits. Take it down. Take it down. If you're chasing it here, unless you basically bought it at my alerts again, you wouldn't be really making any money if you bought if you waited around and bought around here. You just make a little bit, and then it'll take it all away from you. That's what machines do, guys. So if you think you know how to trade this market based on your emotions, you're not getting anywhere, or by watching prices. You have to watch the internals. I was predictive. That's why my traders who basically went with me made a lot of money right at the open. That's it. They made a lot of money right at the open. This was Friday's crash, and that was a crash, a full-scale flash crash. What happened with, and that article explains it very clearly, which I've been saying since Friday, that this was an algorithmic high-frequency trading crash. Boom. You don't get these type of crashes because some mutual fund decided, okay, we're going to hate Apple from now on. Amazon's never going to make money. Tesla is a bullshit company. It's a completely garbage company. And Google, what the hell is Google? No, nothing like that happened. It was a flash crash where the machines piled on each other and stops got triggered. Panic ensued. Retail traders sold. We made some nice, real decent money on a couple of shorts. Real decent. All good. Then you had a hammer reversal right there, which I pointed out. And it came off. Who saw my charts that I showed repeated times on Friday as well as over the weekend? I'm sorry, at the end of the day, and I put two big arrows like this, and I said what? Does anyone remember? Just vaguely remember? No one? I had two big arrows like that, and I said that on Friday. The minute I saw this reversal turn come off this green line, no one remembers, right?
No.
I mean, not the new members. I mean, they weren't around, but the regular members. Does anyone remember? Yes or no? Just say no. Andy, of
Yes.
course you don't remember. You were not in the service. Okay. So the point I want to make is this. You guys are, I ask people, track the charts, and I get some responses back. I am. Well, nobody is. Because if they did, they'd be a heck of a lot more richer right now listening to this ACS than they are. So it's not my loss, it's your loss. I wrote a whole bunch of times, this was a retest of the June 1st breakout. And I put big fat letters. I said it's a retest. To me, these things I identified right away. Right away. It was the June 1st impulse breakout.
Yeah, now I remember.
Okay? No, you don't have to remember. Sheila, did you get a chance to listen to the ACS, or are you going to do it later, right?
Yeah, I did very little.
Okay, when you go through it, I explain this very, very clearly why this happens. So listen to that part very carefully, okay?
Okay.
So what happened on June 1st, in simple terms, guys, all right, is there was a sudden, very powerful breakout on June 1st, and June 1st was Thursday, okay? And I believe it was the day before I can't remember what that exact thing was, but it was a very powerful impulse breakout of this nice double bottom inverted hammers, which we were positioned with. I know Sheila remembers that. And it just went berserk. And we were just loving it, okay? Because we were positioned right. It was boom, 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 boom. You just couldn't get in. We were there earlier, so we loved it. Now, when you have an impulse breakout of that magnitude, that's June 1st. Remember, that's like many, many years ago, right? June 1st seems like, whoa. I asked people what's the biggest crash that happened. They told me no one could remember. So memories of traders are like this. They're the memory of a I'm trying to find who doesn't have a memory. Do kangaroos have memories? What's the animal who really is sloth. Okay, let's say a sloth, who sleeps all day long. So traders' memories are like sloths, okay? They just don't remember anything that happened a couple of days ago. Believe me. And there's a saying in the market that markets have no memory. Well, traders have absolutely no memory. Just remember to put your coffee cup down on the table instead of on your knees, and break it. So just try to remember some of these things here. So when June 1st, and I put it down for people to read, but obviously no one bothered even looking at that. So bottom line is it took 2 weeks, roughly 2 weeks of the market basically staying in a trading band, which we traded very nicely. And that breakout that happened on Friday, which we were positioned from the day before, and then the crash. Remember, the crash started around 11 a.m. from nowhere. And look at my tweets right before that. Sell large positions. We are hitting the upper end of the channel, and it's exactly where I put that marker, because I had drawn this channel from way back. Can't get any better than this, guys. This is like not just spoon feeding. This is like whatever. I mean, this is like serious precision. Just showing you. But people are still not doing anything. So it's getting here on this channel here. It's on the upper end of the channel. The chances of this breaking out over this channel, minimal. Why? Because it's totally overbought. You can't get a surge like that overbought and continue to go higher. You get a pause. We didn't know the pause was going to be like this. So I started shorting, not immediately right here. I saw the candle, but as the candle expanded, it's called expansion candles, I started shorting here, and it was beautiful. Once you saw this reversal candle, all bets are off. I looked back at my charts and said, holy cow, it's simply retesting the breakout. I'm going to call it BR, the breakout level of June 1st. And of course, the market bounced up, opened down a little bit Monday, still had some very powerful bounces on many things. but they were still in the red. The techs were still in the red. Today was the first day they actually turned around and ripped the heads out of the shorts, and we did extremely well on a bunch of them. But we also played multiple reversals on Monday. Even though they were red on the prices, we still made money because we pinpointed the bottoms, whether it's Amazon, whether it's NVIDIA, whether it's, what do you call it, what's the other one? Any one of them, Goldman Sachs. Okay, even Alibaba in the morning, if you sold it and then it was weak during the day, but even if you sold it, it opened up $2.50, went to almost $3. RUT, SPX, you name it. Because this is where we opened. Because we were positioning ourselves around here based on the stows, which were deep oversold and turning higher. So this chart is so precise, it actually caught my eye because this is exactly where we stopped tonight. So we could pull back a little bit, go like this, or we could pull back a little bit more and hit the red lines here. Once we break pivot and below this channel, then it looks very likely we will come back and retest the lows of Friday, which is very possible. There's all kinds of events happening that could drive the market lower. Does it break the market? No. Will we short along the way? Absolutely. But if this pivot is very powerful. And if we do break the pivot, it'll be quick, fast selling. And once we get down here, it looks like we're going to bounce. And will the bounce be like this? Very possible. Is it possible that, again, these are all possibilities. Is it possible that there's something really dramatic happens? Maybe one of the risks over the next week or so is pre-announcements. What if somebody comes out, a big company like Apple? Apple doesn't pre-announce, but hey, imagine Apple comes out and says, oh, we're going to fall short of iPhone sales by 6 phones because Sheila didn't buy the latest iPhone and K-Bot is thinking about buying the next iPhone. And, oh, we were short by 1 iPhone. I'm not exaggerating. They might say, hey, we're short by whatever. We're going to miss sales by a small amount. Apple will drive the market down 300 points in 15 minutes. It can. What if NVIDIA comes out and says, oh, we're going to, you know, that's what pre-announcements are, where they basically warned the market, and by law they're obligated. They're going to miss numbers by a big way. Companies by law are obligated to pre-announce. So we have pre-announcement risk coming up in the next week or so. Because, you know what I'm saying? And if next couple of weeks. But nobody's pre-announced. So anyways, if that type of stuff happens, we could come down and test 2,400. 240 as a SPY is 2,400. It would be this pattern. And it would possibly complete the pattern. So that's tactical trading. It's no one way up. It's no one way down. You got to track the charts. You got to manage your profits. And you can't just leave everything to some emotional belief that the stock is on a one-way ride up. Nothing is on a one-way ride up. Nothing is on a one-way ride down. They're trading within ranges, but you got to be positioned. And that's the last thing I'll say. You got to be positioned in these type of levels. You got to short once you start to see this type of big candle breakdowns, and you got to track what I'm doing. That's it. So, saying all that, it is approximately 9:15 p.m. I hope that I've had the chance to impress upon you fine ladies and gentlemen that moving from a atypical standard trader to the level of being a tactical trader is not easy. Is not easy. It's like a smoker. You can tell him all the stuff that's going to happen to him if he keeps on smoking, but it's very difficult to give up the habit. It is very difficult to give up the habit and the comfort of feeling good. Start feeling bad. When you start feeling bad and start focusing on technicals, your P&L is going to start feeling really, really good. When you start to feel too good and the technicals are saying otherwise, and I'm putting out that I'm selling down 70% of my position, don't risk it. Because end of the day, you're the one who's going to be feeling miserable when you should have done something. Now, are you going to be correct all the time? No. Am I going to be correct all the time? Absolutely not. Am I going to be very wrong sometime? Never. Never. I am never very wrong. Especially when it comes with the market, especially comes to big cap stocks. I could be wrong on a biotech which came out with a non-approval of an FDA drug. Hey, that's black swan risk. We don't know that stuff. But when it comes to trading stuff, I'm never completely wrong. Well, can my timing be off by a day or so? Absolutely. That's all I got to say. So have a great evening. Thank you so much for all the new members who have come in. And like I said, it's all about mental calibration. I am doing it every day after all these years, and I'm the boss of my service, right? I am the boss of Clueless Aid Trading, and I am every single day and every single evening trying to recalibrate to truly become a monolithic robotic trader. So if some of you are not even trying, you have no hope. Start trying tonight. Have a great evening. See you guys tomorrow. Let's have an awesome day. Thank God, and God bless the USA. And I mean that.